This segment is sponsored by Strategic Wealth Designers. Most people plan for retirement the wrong way, but it's not their fault. So here to break down the basics of retirement planning the way it should have been explained all along is Thomas Riley, a senior financial advisor at Strategic Wealth Designers. Thanks for joining us today, Thomas.
Thanks for having me. Nice seeing you again.
Yes, always nice talking to you. Listen, we are at the halfway mark of the year. So what should people be planning for retirement, and what should they take away from the market so far?
Yeah, so the market's been really interesting this year. So we've actually seen the market do actually fairly well, but I would say with some extra volatility, uncertainty. You have what happened as far as the conflict in Iran, and that's still developing, and that can affect inflation there as well. And we actually saw some of the inflation numbers pick up a little bit. But I think the big thing on the stock market right now is that there is a lot of excitement, especially around some IPOs coming out between SpaceX. You have Anthropic, OpenAI coming out soon. But a lot of the growth has actually come from technology, and not necessarily some other kind of staples that usually help grow the economy too. Things like healthcare, consumer staples. So it's an interesting market and more volatile.
Okay, very interesting. I've heard it been said that we're really looking at two different markets right now. There's some headline resilience, but it's really just a handful of names doing the heavy lifting. Is that what you're seeing, and how does that affect retirement planning?
Yeah, so that is definitely more what we're seeing right now, and I think that's a common trend. A lot of the money, even capital that companies invest in, is going towards AI and technology. But if you look at some other sectors along like the healthcare, the consumer staples, they're actually not doing as well as compared to some of the other sectors around technology there. And so what that means is that if those technology investments do work out, it helps grows it. But if they don't, it could bring down the market some, which is actually kind of what we're seeing right now, a little bit more volatility.
All right, so you've laid it out. This is what we're seeing. And now we want to know, Thomas, what's your guidance heading into the back half of the year, specifically for those at or near retirement?
Yes. For those of us that are getting close to retirement, I would definitely recheck the risk inside the portfolio. For anyone, within 7 to 10 years, it's really time to be a lot more kind of cognitive of the risk inside the portfolio. And two, if you are a lot higher risk than maybe your comfort level, it could also be a really good time to take some gains off the table and move some things to safer assets. Now, if you're 30 to 40 years away from retirement, volatility is not always fun, but it works to your best interest in the long term.
Yeah, this is why I love talking to you. You always give the best advice. And for those listening right now who may want to take a closer look at their own plan, where can they start?
Yeah, so I teach a class at George Mason Retirement Planning University to pre-retirees and retirees. I love to have as many people come out as possible, but for it, we talk about all different topics, and we talk about the market and then also the planning side of retirement too. So anyone looking to get some extra education, feel more confident about retirement, they can sign up for class, and we'd be happy to have them there.
Sounds great. Thanks so much, Thomas.
Thanks so much for having me.
For more in-depth retirement education, visit retirementplanninguniversity.com. That's where you can sign up for classes happening in the DMV every month.